Yeah, okay. That should be fixed now. Yes, hello, no. Good now? Yeah, I've got no idea. Just chose to disable my microphone for no reason whatsoever, but that took a minute to fix. So I think we all just about survived the intermission. Hope everyone had a good weekend. Rested up, all that good stuff. And yeah, let's chat. First things first, of course, thank you to the show's sponsor Bybit for making this possible. You can support the show and our sponsor by visiting the links in the description below. I still think it's their jackpot offer going on at the moment, unless something's changed. So if you trade inverse futures contracts, see what kind of benefits that may have for you. So thank you to them. Usual stuff as well, like the video, subscribe if you haven't already, etc, etc. Nothing too serious on that front. We'll start with a question. Why are you not using black background on like everything? Because I don't like it. Aren't your eyes burning from the white screens? No. That's the answer there. Yeah, okay, so... more questions. Okay, I guess I can answer some. I want to change the pacing up a little bit, at least for today, because it's normally just me talking at the screen for a long time, but I sometimes get very bored and tired of that, so we'll take it a bit slow. And we'll probably have a slightly longer stream as well, because I'm going to do Bitcoin, Ethereum, and then I'll have time for altcoins in a meaningful capacity as well. When you take a position based on high time frame trend, I don't, but okay. How do you check intraday charts to observe whether your idea has been validated? I think you've kind of answered your own question there, at least for beginners. If you're taking an idea based on a high time frame premise, then invalidation will typically form on a high time frame premise as well. So there's your answer. And then you say, do you wait for the high time frame candle close for invalidation? Sometimes. Or do you consider low time frame candle close to be enough? No. In most cases, if you are a beginner, if you're not experienced, the best way to fuck up your high time frame trading is by managing it on lower time frames. So basically, I want to know more about how you enter exit position and what you do with low time frame charts. If you're on the newer side of things and you're trading higher time frames, stick to those higher time frames for your trading signals. So daily, 4 hour, etc, etc. Even, the most I'll typically do, although this has not been true recently, is at least for idea management. If it's a weekly idea, I'll gain information from like daily closes, right? If it's a monthly idea, I'll gain information from weekly closes. But the idea of trading high time frames, and then looking at every hourly, 15-minute, etc. close at high time frame levels, that's how you get trapped. Because when people do that, they're assuming that the high time frame levels are going to always look perfect on low time frames, which just simply isn't true, right? You need to give it that room for error, give price time and space to make a wick, etc, etc. So that's my quick answer to your question. If you want to add margin to a trade, what is the most effective way to do it? I'm not sure what you mean by effective. Do you mean in terms of cost of trading, like fees? Add, remove leverage to trades, yeah. I mean, you'd go on a platform that offers the stuff that you need. I know that sounds really simple, but that's kind of what I mean there. From a cost of trading point of view, you could just primarily to reduce fees. Well, first of all, stick to kind of liquid, bigger name instruments where your market impact, chance of slippage, etc. will be lower. And so the impact of your orders will be lower. So kind of that's important from a cost of trading and execution point of view in terms of where you get your fills. And the second thing that comes to mind is using limit orders, or if you want to be even more conservative, limit orders with the post-only box checked, which means that your orders will only be executed as maker, so you'll either get very low fee or even a rebate, as opposed to marketing in and out. Those are probably the big ones, but I could be missing more as well. Gosh, I mean, I'm happy to answer questions for a bit, but we will eventually have to look at some stuff. Where do you think we are in the crypto market cycle? I don't know. Do you think a decoupling between Bitcoin, DeFi plus ETH? So it depends. In terms of decoupling, I'm not sold on like a straight up decoupling where they become almost inversely correlated for big moves and for large periods of time. I certainly think reductions in correlations have been pretty obvious over the last like weeks and arguably even months, but more so weeks. So I think correlations can go down, but I don't think decoupling is hugely likely, or at least I'd be very surprised. I do think in the past week, ETH has basically kept Bitcoin up and alive. We've seen it take some revenge today, which we'll talk about as well. So in terms of market cycle, I don't know. I wouldn't say it's mega frothy. There is some stuff which worries me, but that's not enough to turn it into a trade, so I'm kind of cognizant. Like, the way I kind of gauge where we are in the market cycle, if someone asked me, like, right now, I want to invest in crypto, how much of my allocation would it be wise, quote-unquote, in your opinion, to invest at this point in the market cycle? I don't know. I'd have a rough time going anywhere over kind of maybe 10, 15%. Like, I don't think I would tell a friend to go all in at these prices. I mean, that could change quickly. Like, if ETH starts its all-time high trend, I would say, hey, buy some ETH for something like that. But as things look right now, I wouldn't be kind of herding my friends into going all in type of thing. I don't know, I could be wrong. Those types of questions are really hard to answer. When I trade like level to level and one candle can change a lot, it's always hard to give long-lasting views for this type of stuff. Thanks, Craig. That answer helped a lot. You said you don't trade based on high time frame trend, but all your materials are high time frame trends. I do both. I'd say my trades are primarily built on high time frame levels, but I trade them on intraday, but also higher time frame type of stuff. No, I don't trade options. Is it time to switch from Bitcoin to ETH? Potentially, although not quite yet. Why do you choose swing trades rather than scalps? I trade both. One with more success than the other, but okay. Cool. Let's talk about some stuff. Again, I want to make the pacing a little bit slow because I don't want to rush through this stuff, and I'm frankly a bit too tired to kind of give the crazy, high energy, talking at you a million miles per hour type of thing. But that just means we get to be a bit more thoughtful, move slower, answer more questions, and all that type of stuff. No, it's not Red Bull. It's caffeine-free Diet Coke. Okay, so I want to talk about some news stuff because it's always quite interesting. One thing that's kind of changed from in the development of my trading career was paying more attention to news, narratives, etc. Despite being primarily a technical guy, I just think your potential, it's just an unnecessary burden and hill to climb if you want to trade financial markets, but you don't give a shit about financial markets. I just think it's ignorant. I know there's like price action maximalism, like all you need is the chart, all the information is contained in the chart. That's mostly cope and bullshit. That's not to say you could make a career just trading technicals, but at the very least, it won't hurt you to have an understanding of what's going on. At the very least, expand your knowledge and, get a sense of your surroundings. And we've seen with DeFi especially that there's a real material edge in understanding what you're actually trading and these things as they develop versus just jumping onto price charts. Like, by the time a lot of this stuff gets to price charts, those people who did their earlier research are on their 10x, 20x, whatever it may be, right? So there's certainly scope, like, not to be an idiot with these things, I think is pretty straightforward. We talked about this GameStop stuff on Casual Friday, which is insane. No huge kind of insights here. It's just the story of the day. And we can just look at, I'm going to link this in the chat for anyone who wants to read a slightly longer piece on the whole fiasco. It's actually been going on, this kind of GameStop short squeeze or gamma squeeze idea has been alive for quite a while. Like, the early investment theses, if you will, have been floating around the internet for like over a year, if I read correctly. But this kind of stuff is always interesting. I think it serves to reaffirm the somewhat dystopian idea that with COVID and with young people being in the predicament that they often find themselves in, especially in, Western democracies, etc., that it's kind of, you either trade financial markets with short-dated options and crypto and stuff, or you kind of this forced digital entrepreneurship. Like, we made the joke on Casual Fridays, either trading or OnlyFans. That's obviously a bit crass, but I think kind of mandatory digital entrepreneurship is also pretty. It's weird, right? Like, I've got a lot of friends who are just finishing up university. They'd normally be doing their work stuff now, starting some sort of training, internship, whatever, and just a lot of that has been put on pause and delayed indefinitely, etc. And now they're asking me like, oh, well, how do I start trading? Is this trading course good, etc. And it's stuff that, you know, I'm not sure how much I'm a big fan of that type of stuff. But yeah, that's an interesting article, the GameStop stuff. Anyone interested in what the chart looks like? It sort of looks like you'd imagine at a time when the headlines are what they are. This is just today. Pretty decent daily range going on here, as you can see, right? These things, look, the temptation is to seem really clever and say, well, these things never end well, right? How much of that shit do you see? Like with anything that goes up a lot, normally you'll see we have like our own versions of Schiff and Nouriel Rubini and a bunch of other people who make similar arguments. But whenever something goes up a lot, you'll see the same narratives come to light. Tesla as well, obvious example, is that this isn't going to end well, right? But the point is, you see that argument made like here, you know, here, or maybe even earlier, right? In Tesla's example, you could pretty much start at the bloody beginning. And the point is, this is when the old trope of do you want to be right or do you want to make money comes to fruition. Because yes, maybe your conclusion is correct, that it's not going to end well. I mean, bloody hell, you can make the same analogy with Bitcoin at certain market cycles, like when it's flying to 20k, oh, this isn't going to end well, and yeah, it went down to 3k, sure, but the question is, does it really matter how it ends versus how much of the quote-unquote bad stuff you participate in, right? So for example, like let's say you have a instrument which looks like this, right? It goes like that, and then, you know, it goes parabolic, whatever, right? So you'll have people telling you it's not going to end well here, and, you know, basically the whole way up, right? Now, the point is, if you're someone who's involved in this instrument and trading this market, you don't need it to end well to do money, right? If you just take it from here to here, that's massive, you know, or from there to there or to there, it doesn't really matter. As long as you participate in some portion of this, and more importantly, keep some of that, it doesn't really matter how it ends, right? So I think there should be, really, if people are being reasonable with this, they should really, in my opinion, refocus or kind of adjust their emphasis from saying, oh, this will end badly, and being all doom and gloom, which encourages people not to get involved at all. I think just a change of messaging and saying, well, look, these things correct. So if you're making money from this, make sure you keep some of it. You're essentially saying the same thing, that it's going to pull back a lot and punish a lot of the participants. But at least you're not messaging that or conveying that information in a way that'll either stop people from participating or, I don't know, just has this whole doom and gloom type of narrative about it. It just doesn't make any fucking sense, right? Like, yeah, you see this parabolic stuff, markets go crazy, oh, this is so much above valuation, etc., etc. Like, who cares, right? Who cares? Clearly, these things haven't meant anything for a long while now, and it's not getting any better. It's not getting any more grounded, right? So unless you just want to be an asshole who sees everything go up, and then you're not participating, and you just sit there and say this will end badly, instead of doing that, why don't you just use your sagely wisdom to either participate and shut the fuck up, or if you're not going to participate, when you're going to virtue signal to these people that they're doing the wrong thing by making money, at least have a reasoned argument based on giving back gains versus, oh, you'll all lose everything in the first place. We've seen it in crypto, we'll continue to see it in crypto, we've seen it in Tesla, all this kind of stuff. Whenever someone makes money, you'll have someone who isn't making money telling them they're going to lose it. And I just think it's a really weird obsession we have in financial markets. Just my opinion, of course. Two more bits of data, news, whatever, which I think are reasonably interesting. Where are they? Gosh, here we go. Funnily enough, Bybit coming up on the block crypto. So this is Galaxy Digital, which is Novogratz's fund. We consider ETH to be a growth asset, right? And they're launching Ethereum funds. I'll see more. I think we'll see more of this in this market cycle or the next, whatever. It doesn't really matter. I think this will be a thing that once markets become comfortable with the supposed institutionalization, which sounds like someone's being sent off to a clinic or something. But as we see more institutional participation in Bitcoin and the crypto ecosystem within that category of professionals involved in crypto, if you will, I think there will always be a spectrum of kind of risk. As in, okay, we are in crypto now in some institutional capacity. Now, how much in crypto are we going to take? Obviously, there's a spectrum, right? Where on the really conservative side of things, you kind of just have, you know, something like this. Really conservative side, you just have BTC only, right? And then if on this side of the spectrum you kind of have, I don't know, let's say you've got Trade Ogre, right? Like institutional, family offices and stuff trading on Trade Ogre. Obviously isn't going to happen, just as a, to convey the idea. And where you lie on that spectrum varies. I think at the moment we're very much kind of in this area, and the prevailing narrative is that yes, there is professional institutional interest in Bitcoin, in crypto, sorry, but that primarily takes shape in Bitcoin as a kind of inflation hedge or whatever, right? And I think as a lot of this professional investment becomes more crypto native, and as we develop custody solutions and improve all of that type of stuff, as ETH continues to improve fundamentally, as DeFi shows real use cases or continues to show real use cases, etc. Ideally, those some which aren't self-referential, we'll kind of see a shift from just being, this being the only acceptable or orthodox position to kind of shifting to the other side of the, the trade ogre side of risk, with ETH maybe falling, somewhere here, right, or here. So I think that's interesting. So this is kind of a trend to keep an eye on, to see how the kind of professional interest in crypto spreads, and it should come as no surprise that ETH is the first port of call for that type of stuff. So that's something to keep in mind. Final point, I just want to cover this briefly because there's been a lot of really weird speculation. Why can't I drag this down? Hold on, give me a sec. My technology does not want to cooperate. There we go. Nasdaq listed Marathon patent, I don't know how to speak English, group buys 150 million worth of Bitcoin as part of the company's treasury. So again, your classic kind of treasury purchase, Michael Saylor-esque sort of thing, until you realize that this is one of the biggest, I think, miners, like cryptocurrency miners in North America, right? And they've been in Bitcoin or crypto since 2017. So it's a bit of non-news. Like, yes, they did a raise to specifically kind of purchase some Bitcoin, but I think from a business or from a commercial point of view, this isn't huge news, right? What you want to see, or what you want to continue seeing, is skeptics or, I don't know, metals heavy and really kind of defensive funds take an interest in Bitcoin. We've seen that. More of that would be great. I think this kind of stuff is just really good PR, marketing, signaling, whatever. You get a bit of a pump in stock price usually, and that's kind of it. I mean, their business model is crypto. The fact that they have Bitcoin in treasuries and reserves is kind of the least surprising thing in the world, right? So always worth reading between the lines when it comes to this kind of news, and understanding, how much of a risk are they actually taking as a business by diversifying their treasury holdings into Bitcoin. At this point, this is like Bitcoin and mining is their business anyway, so maybe it's not as massive. So I just wanted to briefly touch on that. That's all I've got on news. If you don't enjoy these sections where we cover the market more broadly, let me know. It's unlikely that it changes, because I kind of think it's important to know what's going on around you. And at the very least, if I start chatting, you can just turn off the stream for 10-15 minutes, and then you come back. We'll be doing our classic candlesticks and squiggly lines. So on to candlesticks and squiggly lines. So as I said in my short clip that I posted on Twitter, Bitcoin market structure isn't fantastic at the moment. At the very least, I don't love how it looks. And I'm like a very simple, like, market structure. Yes, there are some nuances and ambiguities when it comes to, which swing high or swing low do you use? Is this really a lower low, higher high, etc.? Like, do I use the candle body or the wick? Like, there is room for interpretation. At least for me, the way I use market structure, it tends to work pretty unambiguously. And it also is something that has a lot of weight in my system. So kind of trading against high time frame, at least daily market structure, is just not something I'm a huge fan of. And also, if none of this makes any sense to you, I've got a full video on market structure on my CryptoCred YouTube channel, and I think it's a good video. Like, some of my videos aren't very good, like the trendline video is bad, the entry triggers video is bad. Some of the videos are really dated, like RSI and Ichimoku. You could just tell that just not great videos. But the market structure one is good, so go watch that. I was talking to the Duck earlier, and I said that if I can go back in time and kind of just learn one thing to start with when it comes to technical trading, I wouldn't actually start with support resistance. I'd start with market structure, right? So whatever, if that carries any weight for you, great. If it doesn't, it's still worth being aware of. I mean, the entry triggers video isn't bad. It's just not as good as some of the most recent stuff. So when it comes to market structure, especially in a market which offers like really long wicks, right? And we're using highs and lows, so those could serve to be like outlying data or whatever. I've just found both in levels and market structure that using candle bodies has just served me far better than just about anything else. So if we take a look at the preceding price action in kind of blatant, excuse me, really selling your course here, really selling your content. Yeah, I mean, whatever. I'll just be real with you. If I think a video I made in the past is bad, I'll tell you if it's bad. If I think it's good, I'll tell you it's good. You know, I don't make anything. Actually, that's not true. I make like 50 quid a month from ad revenue from those old videos, but it's not in my massive financial interest for you to watch those videos. If they help, great. If they don't, fine. So market structure on the way up was literally kind of the best indicator of trend, price action, whatever. As you'll recall, bullish market structure just means higher highs and higher lows. And not only did you just have that on the way up, but you basically, this kind of higher low portion really wasn't visible for the most part. You kind of just went up, and then the pullback didn't even come close to the prior swing, and the market was just melting up. It was kind of just higher highs and higher highs, right? That's kind of what market structure looked like. When price enters consolidation, it's a shift from higher highs and higher lows to kind of lower highs and higher lows. And that's fine as long as it breaks in the direction of the preceding market structure. So in this case, you have market structure going up, you enter a consolidation, you typically want that consolidation to break to the upside, and so then the consolidation, by hindsight analysts, could be called reaccumulation or whatever the fuck the popular trending term of the period is. Now, bearish market structure is when you have lower highs and lower lows, right, which is basically a full whatever reversal from what you had if the preceding trend was up. So I don't like Bitcoin market structure at the moment until it makes a higher high, right? It's pretty straightforward kind of claim. Bullish market structure, which is easiest to trade and where longs pay the best, is when the market's making higher highs and higher lows. I want to be long in those conditions. If the market's making lower highs and lower lows, that's a sign of weakness, and you know, if I am long, it's technically counter trend, etc., etc. So if we kind of apply that to Bitcoin at the moment, if we have this as our low, this is our high, and this is just within the consolidation, right? So once it kind of stopped going up only, we entered a range. We're kind of tracking the developments from that point onwards. Low, high, higher low, right? We can extend this a little bit, whatever. Higher low. This is a questionable swing point. We will talk about it momentarily. We'll talk about it momentarily, but whatever. If we take the big swing points, as in the market structure video, we like the really obvious stuff. So really obvious low, high, higher low. For me, this is of the big swing point, lower high. Now again, as a reminder, if the market's kind of neutral, you want to see lower highs and higher lows. So as the sellers are moving down, the buyers are moving up, right? That kind of equilibrium, if you will, just making up terms at this point. But what we had most recently is, instead of a higher low coming in after this point, we actually made a lower low. And this is the first kind of shift in market structure to the bearish side, especially at least when you consider recent price action, because at this point you've got a lower high relative to the last swing, and then a lower low relative to both the last swing and the swing before it, right? Which just simply isn't great. So that's kind of what market structure looks like to me right now. And until that changes meaningfully, I'm just going to assume that Bitcoin's going to be weak, right? And if it wants to show me that it's strong, then shift market structure to the bullish side. It's a pretty straightforward, in my view, requirement. Now, those of you who watch the market structure video are aware that sometimes you can actually get really bullish setups when price makes a lower low. Now, that may not make sense, but the whole idea is it's a kind of reversal setup or a trap setup or whatever you want to call it, right? So normally, as you'll recall, if the market's bearish, you have lower highs, lower lows, lower highs, and kind of that pattern continues, right? Now, the first sign of reversal is when you've got a lower low, and then instead of continuing the pattern and offering a lower high, it actually forms a higher high. And that's your kind of template for reversal. It's a break. That's what we call kind of a break in market structure. I mean, yes, physically on the price chart, etc., but it's also a break in that sequence of lower highs and lower lows. That interruption in the bullish sense comes in the form of a higher high, right? Relative to the where the last high was, whatever. So if we kind of apply that to the moment, if we take the most recent So this is the lower high level, and this is kind of where the market's finding resistance right now. I think it's reasonable to use that level, or if you want to be a bit more generous, use that whole down candle as a kind of market structure area of resistance. I think that's reasonably straightforward. But from a reversal point of view, what would it look like if those conditions we boxed out were met? Well, you would need a higher high, okay? So as a result, we kind of move backwards. Where was the last lower high? I mean, yes, you could technically use this consolidation. I'm not a huge fan because I like my market structure levels to be swings. And for me, this was the swing, and this is the consolidation after the swing, right? Even if you kind of look at it in terms of triangles, like you can tell this is a swing. You can tell this is a swing, right? I know that these aren't great. We have to make do with what we've got. This is definitely a swing. This just doesn't really cut it for me, right? So again, we can be conservative. If we want to include some of the structure we've got at 36s, the last real kind of swing lower high was formed on this move here, which lands at around, whatever, 38k, let's call it, okay? That's the last big lower high. So again, for market structure reversal, you've got lower low, lower high, lower low, etc. And then the reversal, the time to pay attention is when that pattern breaks and makes a higher high, right? Obviously an outlier to the preceding pattern. So for Bitcoin, that would mean something like this, right? A break above the upper boundary or the swing high, whatever you want to call it, which would be at around 39k. So at that point, price breaking through this would be the higher high, which would make a case for reversal in market structure. And at that point, you'd expect the swing high to then act as support. You get your basic support resistance flip at that stage, so support within the red box, and then your targets. I think at that point, all-time high. I mean, yeah, technically resistance, but not really, not in those types of setups. I mean, it's worth paying attention to as a kind of range high trouble area. Maybe you get some FOMO chasing the all-time high break, and derivatives have to reset, whatever. But from a high time frame perspective, this would be kind of a pit stop, and then at that point you've got, I think, from 40 to 50k or 45k, or use round numbers, whatever suits your fancy, I think is reasonable. So that's kind of Bitcoin at the moment. As I said in that short video, paying attention to market structure has paid me very well. Not paying attention to daily market structure has cost me a lot more. So whether it's for good reasons or not, at least in my personal experience, it's something I give a lot of weight to. As a result, I have no issues taking the bullish trade at a higher price, at 38, 39k, whatever, as opposed to 33k, because I think the probability disproportionately shifts in my favor. So at that point, not only are the probabilities in my favor, but I can also bet more in terms of sizing to bring that idea to action, or to actually take the trade based on that type of logic. So kind of good technical entries isn't just about the lower the entry, the better it is. Obviously, probabilities matter. Risk definition matters, and sometimes just structurally, the higher entry and paying up for an entry is better than buying low when it looks weak. So I'd rather pay up for strength than pay less, but for a market that looks like shit. And that's something that isn't always obvious, but I think is pretty reasonable and self-explanatory. Now, in the short term, a point I want to make from like a support resistance point of view, I think it definitely could put in a rally towards this lower high level, simply for the reason that the bearish retest in the short term, like the very short term, has not been successful, and we've had a bit of a range breakout from the inside day, right? So you had this cluster here, move up, support, breakdown, chop, and then this looks like a breakout attempt from that cluster, so that's still in play. But the point is, like, why aren't you long or bullish into this kind of move, etc.? Well, point number one, as I mentioned, because of daily market structure, I'd rather pay up and get a higher high before punting that and then, to infinity and beyond. And point number two is still, I think, I've got market structure resistance, if you will, in this type of area. So if you're suggesting to me, so the suggestion would essentially have to be, if this is generalist, resistance, and this is support, you're telling me, well, why don't you trade this? Right? And with the market where it is right now, there's just nothing there to take advantage of, so to speak. So that's kind of Bitcoin. Main points being market structure is bearish, for me at least on the daily time frame. Short-term reclaim of support is positive, but it kind of lands back at resistance. So you can kind of see the prevailing theme is that this mid 30k area, for me at least, is kind of shitty, right? Yes, you've got the reclaim of this, then you've got resistance here, then is this actually resistance? Is this like a supply zone before the move down? It's all dog shit. I don't want to deal with it. Like, why deal with ambiguity if I can just wait for something and then pull the trigger with size where the scope for ambiguity is much lower? And for me, that scope is reduced significantly once we get a higher high on the daily time frame. Then it's kind of bull train back aboard, and I'll be kind of shouting for at least all-time high, but most likely 45k, 50k, etc., etc. And that also, I think, preempts one of the main criticisms that happens when I make these otherwise reasonable points in almost any other market that I'd rather pay up for an entry. People start asking about risk-reward considerations. Well, if I buy here, my risk-reward to resistance is, way greater than you buying up here. I mean, yes and no, right? And the no part of it is you can sometimes get better risk definition on the continuation trade than kind of a range trade, if that makes sense. So, for example, if you're buying up here, I mean, your risk maybe down here if you're being conservative, right? Or whatever, like below support, which I don't recommend generally anyway, so okay. Whereas if you're a momentum continuation, a lot of the time as the market starts to pull back, you have a very clear area that, okay, this is either the pullback or I'm completely wrong. So a lot of the time, the momentum continuation trades in terms of stop placement can actually offer better risk reward higher up than the lower down entry. Again, not intuitive, but it's just true in terms of structure. Low prices aren't guarantees of better risk reward, right? Not always, at least. It always depends on the context. The second point to make is a lot of the criticisms that, okay, well, if you wait for this, then, your risk reward is inactionable because you've got resistance at all-time high. But again, something I've mentioned already is that if this idea is correct, that you've got a trap, essentially, you've got a lower low into a higher high, if that's that's a reversal setup, right? That's a strong reversal setup that we're going to see on the daily time frame, and those moves don't tend to settle for whatever this is in terms of percentages, right? Like 5% from the level to the all-time high. At that point, I'd expect much higher prices, and so my take profit wouldn't be at the all-time high; it'd be way higher, right? So that's also something worth bearing in mind. Does that make sense to anyone at all? What is the dotted line for? I've got no idea which dotted line. I don't think I've got a dotted line. Oh, this is just the trading view thing. It moves around with my cursor. Someone asked about intraday market structure. I commented this on Gainesy's tweet, and I traded like shit yesterday, essentially, and I will cover that when I talk about ETH. I had an order to buy, and just an example of that setup, actually, I had an order to buy at, I think, 33.1 flat, or thereabouts, basically this area here. And this is a really good example of that type of market structure setup that we discussed. Just to give a clear example, and also show how, well, essentially how I fucked up. You have that pattern of lower low, lower high, etc., and assuming it's kind of happening in perpetuity or just for a while. And then the area to look out for a shift is when you get a... Oops, hold on, that's wrong. Low high, low low. There, right? And then you start paying attention on the reversal side or on the bullish side when you get at this point, right? When you get that higher high after a lower low. A great example, actually, was Bitcoin at this swing point here, right? So if we're taking the big swings, at least, right, you've got market structure, which kind of looks crap, right? At least moving down more recently. And then you have this kind of springy type of price action. If we look at the level we've delineated, stuff that I specifically like, and that's within this red box, you've got a clear lower low formed on this swing, right? Relative to this point here. So when that happens, if market structure is bearish, the lower low is here. What do we expect next if the market's bearish? A lower high to come in somewhere between the last swing point and the swing low. So kind of in this area. What do you get instead? You got a Chad candle that completely blew it, right? So this candle here, right? The higher high after a lower low is this. Lower low, boom, higher high here, right? And that's kind of literally what we talked about on the daily time frame, just on the hourly. And so that swing high, which preceded a lower low and then gets engulfed, if you will, that tends to act as your support. And that's what happened. Legit had an order, I think 33.1 flat. but I pulled it, and obviously the trade didn't trigger because I fucking pulled the order, and that traveled decently to the first trouble area, or significantly through it actually, at 34k. But I just want to bring up that example to show that, it is visible across all time frames, but I fucked it up. The reason I fucked it up takes me to ETH. I don't know if anyone gives a shit. When I say I pulled an order, it means I set a limit order to buy at a certain price in the market, but then I cancelled the order before price reached it. That's what I mean by pulled. So you put an order in the market, but then you get rid of it before it has a chance to trigger, activate, whatever. So with regard to ETH, the thing that has my interest... Oh, wow, you screwed up. Thank you. Yeah. Yes, I screwed up. Unbelievable, isn't it? Thanks, Demo. Or Demo. Thanks for hanging around. Yeah, so I think what's interesting with ETH, essentially for me, is more or less the all-time high level. I'm still broadly interested in the all-time high kind of momentum continuation trade, which takes the simple form of all-time high acts as resistance in a very short term fashion, just like I did for Bitcoin, but then eventually, the expectation is that you get a bit of stickiness at the all-time high, but ultimately the fact the price is here in the first place is bullish. Like if you're looking for SFP type of stuff or failed breakouts, etc., one of the worst place to do that on an instrument is the all-time high, because at that point, every single holder of this instrument, unless they literally bought the macro top, but for the most part, every single holder of this instrument is up on their investment a lot, right? And the incentives to sell are basically really fucking low when the market looks like it's going to just keep printing new highs. And I think it helps that we've got the kind of Bitcoin leading by example, whereby it broke all-time high and doubled, essentially, right? So I think there's a similar appetite in ETH. That appetite has not always made it easy to trade. Like we saw derivatives get really bullish into the all-time high. So, we had I think almost historically high funding and open interest in ETH before the all-time high was broken, as I suppose lower time frame, more aggressive participants were chasing that trade. And I think that's the mechanism by which these sorts of trades get tricky. Broadly, market participants understand that all-time high isn't the best resistance in the world. At least that's not the one where you bet the farm. And there's a broad understanding that breaking above it will lead to significant continuation. But actually positioning for it without getting completely rinsed, that's where things get difficult, right? So I'm still generally interested in the idea of an ETH all-time high continuation trade. I think if that were to happen, ETH BTC already looks good. I think that'll continue to outperform. ETH would probably go to like 2K or something at least. And I think DeFi coins would do well in the short to medium term. No, definitely in the medium term. Short term, I could actually see DeFi pull back a little bit if ETH creates a vacuum, but that's a secondary thing. If you just go on my Twitter, I posted like a couple of tweets about the whole ETH DeFi continuation macro trade bullshit thing. So just go read that. But in terms of actually trading the damn thing, I'll show you what I fucked up and how the market looks at the moment. So I was going to limit by Bitcoin, but my idea was, well, I'd rather, if I'm long crypto, and ETH BTC looks good, and ETH is using all-time high support, I'd rather be long ETH than kind of double long ETH and Bitcoin, because if my market read is wrong, I've kind of doubled my risk, right? So I'd rather bet more on one outcome than spread myself thin across two instruments, especially if they've been sort of almost inversely correlated recently. That's kind of also just to quickly touch on the topic, which altcoins should I buy if it's alt season, etc. I think there's a common misconception that you should be in everything and everything's going to go up. I tend to disagree. I think it's better to just have a basket or even just a handful of altcoins which are already strong and focus on those and outperformance in those, rather than making sure you're spread very thin across a million positions hoping to catch one or two of the moves. I think I was employing essentially similar logic in ETH. But the basic idea, you can probably already see it from the chart. All-time high is 1420. By the way, a lot of the time I chart Coinbase and then execute on either inverse or linear futures platforms. I'm not going to talk too much about that because I'm from the UK. Haha, wink, wink. Just kidding, obviously. Everyone knows I'm from Moscow. Anyway, My basic idea was previous price action at all-time high has been kind of really rough looking. You know, close above, close below resistance, resistance takes a shit, etc. So what I was essentially looking for, yes, on the hourly time frame, because we know that when Bitcoin broke all-time high, there was no kind of macro pullback, whatever. It literally just mooned it. So I was being a bit more jumpy and aggressive at the level itself. And my basic idea was, okay, at no point in the previous all-time high attempt did the all-time high level actually act as support on lower time frames. So once it does act as support on lower time frames, I'll step in and buy it and try to catch at least the first portion of that type of leg. Even though I'd said on stream previously that I'd wait for a daily close above the level, I didn't follow that, right? Whatever. So just to zoom in, откуда-то в Москве, yeah. So just to zoom in on that price action, my trade idea was, I took two trades actually. One was fine, one was shit. So the one was fine that was within this consolidation, and it was kind of a market structure oriented setup within here. So the basic idea was price had made a lower low on a closing basis, low into a lower low, but then made a higher high, right? High relative to the last high. Again, same thing, right? Lower low into a higher high is genuinely, not genuinely, fucking hell, generally something I pay attention to, right? So at that point, I put a limit order at the lowest close level itself, which was here. Fantastic, great entry, right? My stop was at the low, and my target was this hourly highest close level here. I didn't manage this trade amazingly well, and the basic reason was I was watching price on this candle here, and I didn't actually get filled on the wick, and it closed below my level. And I just thought, I don't want to be a dick for a tick. If you know where that comes from, you know where that comes from. So I ended up closing the trade with a market order on the close of this hourly candle here. So that's fine, but you kind of see where it went next and kind of doubled my R into the all-time high. So there's things to be improved, etc., but generally that's fine, right? And again, it's a very bread and butter example of the type of market structure things that I pay attention to. So that trade was fine. Again, left stuff on the table, whatever. The shitty trade was at the all-time high. The basic idea was all-time high flip from support to resistance, from resistance to support, which it didn't do previously, and I'm going to buy it and wake up rich. Of course, what happened was I saw this dump, actually. This is a crazy candle to watch. I was watching this candle form on lower time frames, and if we go back, yeah, I think it was essentially here, right? I was watching this first dump from the all-time high on lower time frames, and I was thinking, okay, well, this looks rough, but then it got bought up, right? You can see that on the hourly candles. The first real sell-off from all-time high closed as a wick, right here. And I thought, okay, well, now that's the market in full send mode. My understanding was these sellers are going to eat shit, and basically anticipating the same reaction as we had before, but unsuccessfully so. Market looked really strong on the close. That's where I entered. Classic risk. Actually, not at the low in this case. Wait, what the fuck? No, it was at the low because I'm a dickhead. Was it? No, I think I used the thrust candle stop and got stopped out. Yeah, that's it. My risk wasn't at the low. I watched this candle close, and because I thought I was so clever, I'm saying, oh, well, I'm not going to use that stop because, that's so obvious. I'm going to be a, high IQ trader and put my stop on the thrust candle, which broke the all-time high level in the first place. And again, didn't have a take profit in the market for that type of trade because the idea was all-time high expansion. And of course, came in and got washed out actually on this move here. And then that's still acting as resistance at the moment. Tough tits. Would I take that trade again? Probably. Probably, but obviously, it's just a bit tight. And, I was watching this shit at 5 a.m. 4 a.m. was the close, the next candle, etc. So I probably shouldn't have been even at my desk in the first place, but whatever. Where does that leave ETH right now? I still think, from a high time frame point of view, if you look at Bitcoin all-time high, right? If we look at the weekly candles, there were similar kind of jitters going on in the market when we had that, right? Not to the same extent, but you had some sort of slow down, chop, whatever, as the market was coming into that sort of level, right? That's literally the last little slowdown consolidation we had before a weekly trend that doubled price, right? I think ETH is taking that slightly to the next level. It is significantly more jittery with a 2 tests and both closing below. So for one closed below and the current weekly candle is forming, obviously because it's Monday. So it's kind of similar. But I think from a high time frame point of view, just the all-time high break is still a valid or valuable thesis in one form or another. I'm not comfortable charting it on lower time frames. If you had to put a gun to my head, I wouldn't mind delineating this consolidation here, right? Again, you've got a move, kind of a high, lower low, lower high, lower low, and then if it makes a higher high through this level, then we have our standard lower low into a higher high type of structure, which at that point would look pretty reasonable, with this area turning, from resistance to support, and there might be something there to punt closer to the all-time high level itself, but it obviously hasn't set up at the moment. For more conservative type of things, I still think a good daily close back, or just pretty much through the level, would be a decent trigger as well. I think when Bitcoin did that properly, it played out reasonably well, if memory serves me correctly. Not that I traded that trigger, but unless I'm literally making things up, which sometimes happens. Yeah, I mean, look, this is what you want to see versus the shit I was dealing with yesterday. Compression into the level, right? I mean, compression, I'm probably not using that term correctly. A grind into the level, let's use non-technical terms, and then a big breakout which doesn't look back. So I think setting similar standards for ETH at its all-time high, looking for that type of similar trade is pretty reasonable. What I was doing is a bit less reasonable, but I don't have too many regrets over it, to be completely honest. This level, it's script or manually. They're all manual. I don't use any pivots or anything like that. So where does that leave ETH for the time being? This is going to be a really bad answer, but I don't really care for levels aside from the all-time high and the kind of range low. So for example, I could come up with a bearish argument on the daily without using, again, assuming the all-time high doesn't exist, you could make an argument that's bearish on the daily, implying some sort of 3 drive pattern being formed here, and I can almost guarantee if we were to bring up some sort of momentum oscillator here, it would be showing bearish divergence. In fact, why don't we do that? How about the McDonald's? There you go, right? I mean, that's a decent example. So if you're here for bearish propaganda, right, you'd kind of do a 3 drives and kind of this going down, oh my god, it's all over. Okay, so that's one argument to bear in mind. At the same time, if we're using the range side of things, you can come up with a lot of bullish propaganda and say, we've got this swing high, right? That's now been reclaimed on this daily close. So as long as no closes back below whatever this is, 1300 or thereabouts. What am I talking about? 1200 or thereabouts, right? Range breakout here. Whatever. As long as that's intact, we've now reclaimed it, we're back above it and that's it. That's full send, right? Or even if you want to really cope, you could draw something like this based off the highest close and say, well, this is just a bullish retest and the whole dump has been engulfed as support. So you can come up with kind of anything you want. I'm not convinced necessarily with structure on lower time frames that's forming at the moment. I'd much rather use my all-time high as a reference point and look for strong trades through that as opposed to trades into that, if that makes sense. Where would I think ETH would start to look like shit or a breakdown in market structure or whatever? That should be fairly self-explanatory. You've got a high, you've got a low, you've got a higher high, you've got a higher low, right? So the bearish shift in market structure would come if price makes a lower low, which would most likely mean failing to find support or form a bounce at this 1K level. Or if you want the Donald version, which is also quite nice and essentially incorporates both of those, is to use this down candle as a kind of range low. And if that fails, then I think there's a really good chance that a lot of this gets filled in back towards 700s. As bad as that sounds, that's sort of what we'd be dealing with, unless blah 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 reclaim, everything looks amazing. Okay, so long story short for ETH, I understand those who are looking at lower time frame structure here and kind of look, is this the bullish retest, is this the bullish retest, daily market structure, etc. Like, I get it, but I'm interested in the all-time high trade, and that's what's got my focus. And until that resolves one way or another, that's really the only pretext under which I'd be really bullish. or specifically acting on long side trades. Okay, so yes, there's a lot of stuff that's valid. It's just I don't care about it, you know? Does that make sense so far? Is that clear for ETH? I think it's worth it a lot of the time to just look at a chart and say, what do I care about? And if there's something that's really clear and really compelling for you as a trader, there's nothing wrong with saying, well, if anything that happens outside of that or between A and B, I don't really give a shit. My focus is this. Okay. ETH BTC looks good on high time frames. Most recent weekly close. This actually looks surprisingly strong, and the reason is I expected to see this type of candle with the USD pair entering into price discovery or setting new all-time highs. It's pretty impressive to see this multi-week breakout candle in the context of ETH still stuck at all-time highs, which is pretty cool, right? The basic technical premise here is we've got like a multi-year, and again, I developed this idea somewhat better on via Twitter. But the idea is a multi-year range here, essentially, right? Multi-year range, and you've got the highest close. You had the first fake out above it, right? And since then, amazing resistance for a kind of cycle top, amazing resistance for a cycle top, and it looks like at the moment, with the available evidence, that's been broken, right? Now, could it come back and retest and then do that? Yes. Does it really matter? I mean, no. The only thing that would matter is losing this level and closing back below it. Whether it pulls back or not is like a secondary consideration, especially if we're not trading this pair like in itself or primarily, and more kind of using it to gain an understanding of ETH relative to Bitcoin or altcoin risk appetite, whatever. I think just using high time frame levels and weekly closes is more important than being granular or precise with where it bounces or where it doesn't. In terms of targets for this, the same kind of logic applies. It's more to do with how much space is there and how many weeks of a trend can we potentially anticipate, as opposed to kind of trading it as support resistance per se. I've had this level, we've discussed it for a while, basically the point of breakdown, which then entered this kind of raging period. That's kind of 0.05, nice round number as well. I don't know how carefully you've been observing this type of stuff, but when markets enter either price discovery, in the crypto native way of using that term, or if it's testing levels which it hasn't kind of traded around for a while and therefore are far less significant, whatever, this kind of round number type of Fibonacci voodoo bullshit just works a lot better, because the market always wants reference points and participants always want to have a grounding for where the market is. So if you're stripped of your tools in terms of historical levels, then other maybe less sophisticated tools have to then come and fill that void when it comes to where is the market really. So with a lot of DeFi alt USD pairs, which are obviously in their first market cycles and in price discovery, whatever, you see really good support resistance reactions at flat numbers like $7, $8, $9, whatever. So I think something similar is applicable for ETH, but there's like at least kind of 50% as very conservatively for a first trouble area between the break of this range and the next level. But I think the macro context also matters. If this is indeed the breakout of like a multi-year range, then at the very least, if the breakout is real, genuine, supported, whatever convenient confirmation term you want to use, I think with a multi-year range breakout, it's reasonable to expect multi-week, potentially multi-month, but I think less likely, at least multi-week trending in the direction of the break, right? So what are the implications of ETH BTC breakout? Well, I think the obvious ones are ETH outperformance relative to Bitcoin. I think the real trigger for that, as mentioned, would be the all-time high break. That's when I think the acceleration will really kick in. What will it mean for altcoins? I think it's interesting. In the short term, I'd be willing to argue that ETH performs better than most of them, like in the very short term. I could definitely see ETH forming this kind of vacuum where DeFi and other shit coins, etc., essentially a rotation takes place from those more speculative whatever altcoins which have already moved a shit ton to ETH for those traders looking to bank like an easy, so-called easy 2x on a higher cap, right? So no one wants, basically the summary version is probably no one wants to be underexposed to an instrument that's just broken all-time high in a market where Bitcoin doubled when it did the same, right? That's kind of the basic version of that argument. But in the medium term, with a strong and trending ETH BTC, and more importantly with ETH USD setting new all-time highs, I just think that's obviously positive for altcoins specifically, not your shit, XRP, whatever, old guard type altcoins. I think that the Ethereum ecosystem altcoins, if you will, the DeFi stuff, the things that are associated with ETH, the stuff you trade on Uniswap, etc., that kind of basket, that's the one I'd expect to perform well. Not least because of the so-called trickle-down effect, and I would see the ETH USD breakout as a kind of green light for risk. But also because those DeFi coins have just been going up with or without ETH anyway, right? They've been in secular uptrends essentially. They're just making higher highs and higher lows and mooning, irrespective of the market at large. Even when Bitcoin and ETH were nuking like 30%, etc., they pretty much shook it off, didn't care, and kept going up as well. So it's not like they're dependent on ETH to go up in order to continue trending, but I certainly think it would help and not harm those chances. So to recap, ETH BTC good, yes, but I think the thing to really look out for and what would churn this higher and the real green light signal would be ETH USD all-time high breakout. Short term, probably ETH USD continues to outperform kind of everything. Medium term, I'd expect that to trickle down to DeFi stuff and reinvigorate that side of things if ETH starts to slow. Does that make sense so far? If you've learned anything, like the video, let me know that I'm not just mumbling to myself. That'd be cool. And any questions, let me know as well. Stumpy says, what price action would you consider as an all-time high acting as support? Maybe I'm the wrong person to ask because I fucking lost the trade taking that idea. I find recognizing breakouts versus fakeouts so much harder. Yes, I agree. Look, I think conservatively, a daily close above is probably a good guide. That's not perfect, but it's certainly better than the shit I've been doing. I don't think it's necessarily easy to take the all-time high trade itself. But if I were to take my own advice, you don't need to trade at the all-time high level itself. Just once it's clear, you need to actually participate as opposed to wait for a pullback. Like, you won't believe it. Some of the shit I see, some of the DMs I get. Like, there was a bloke who messaged me saying that he sold all of his Bitcoin, and then he also shorted some, but perhaps even worse, he sold almost all of his Bitcoin, I think, when price broke all-time high. So literally, this bloke in my DMs sold like this. And I asked him why he sold it. And he said, well, yeah, it broke the level, so it should come back and retest it. I know it sounds insane, but fuck. But this shit actually happens, right? There's some people actually think in those terms. If you're watching the stream, I'm sorry, but Jesus Christ. The important lesson there is you don't need to trade the all-time high perfectly. It's just about recognizing what the implications are and acting in a reasonably timely fashion. Because again, if your idea is, okay, if price breaks all-time high, it's going to, let's say double, right? So where's 40k? Like roughly here. So if you're arguing that this breaks is going to lead to this, does it really matter whether your entry is like here, or even here? Like absolutely not. This is fucking irrelevant relative to the size of the move you're trying to capture. I think that's something I've droned on about a lot in Twitter, but the precision requirements of your entry are, let me think about this, inversely correlated with the type of move that you're trying to capture. I may have fucked that up, but let me rephrase. If you're trying to capture a big move, a precise entry is far less important because there's more on the table. If you're trying to capture a small move or a small rotation, then in order to make the trade worth it, you need to be far more accurate, even just from a cost of trading point of view. Like once you've paid maybe market in, market out, is there anything left on the table for you to capture to actually make money from the trade? So this is when you see really weird shit. Someone's like, yeah, Bitcoin's going to go from 20 to, Bitcoin breaks 20, it's going to go to 40. Okay, does it matter if you enter at 20.7, 20.9, 20.2, 21.2? It doesn't really, right? You're either really right on the idea or you're really wrong on the idea. The actual trading at the level, for the most part, is a distraction. I think a similar point can be made for ETH. If your idea is that, 1500 break, 1420 break is going to lead to 2k as a target. Let's just pull that out of the sky. 2k or 2.5k or a doubling even, 3k. Does it really matter? Like, let's say we take a middle point, like 168. It's a magic fib number. There we go. If your idea is that price is going to break this and travel here, does it matter if you enter, here or slightly here, etc.? It really doesn't, because of how much, upside you've got left to capture. So don't make my mistake and try to be too surgical at the level itself. I really think I was getting a bit arrogant because this trade worked out nicely, and I was like, oh, well, I can just basically compound this and take the all-time high trade. Bit of a dick move. I think the better play is to wait until it's clear and catch what's left, as opposed to trying to be a genius and trade the level itself, in my opinion. I'll go over some altcoins. I'm not huge on requests, but maybe if we've got time at the end. ADA is one of the ones out of the altcoins that's actually doing well. We will look at Sushi, Aave, etc. So just a very quick point on indexing. I think the following is applicable. It depends on your goals and on your portfolio, but for the most part, most people will have primarily or kind of heavy Bitcoin skewed exposure, at least kind of, I don't know, the standard non-wrecked shitcoiner trading portfolio will just have like a Bitcoin, ETH primarily, and then some allocation for shitcoins. But it's always worth, in crypto bull markets or whatever, being aware of, am I actually outperforming the index, so to speak? So if your portfolio is primarily made up of Bitcoin, let's say, and your alt BTC pairs are struggling, then you're kind of shooting yourself in the foot. Why are you trading these shitcoins if just holding Bitcoin brings you greater return with far less risk, right? And I think the same logic can be essentially extrapolated for an ETH all-time high breakout. If ETH starts mega mooning and that becomes the next big thing, or where the big rotation or cycle occurs, and you're trading altcoins still, are you actually outperforming ETH? So you kind of have to look at alt BTC, yes, but then also alt ETH pairs. Like, is it just easier for you to hold the all-time high breakout and make money, or are you harming yourself by trying to be a genius and trading a million other shitcoins while, holding ETH may be the most profitable thing, at least for some portion of that rotation. So that's important. You always got to know, like, what am I trying to do by trading these altcoins? Am I trying to outperform Bitcoin? Am I trying to outperform ETH? Am I a USD trader looking for trade opportunities? Like, having a mandate, if you will, treating yourself as a fund almost, is kind of important, I guess. Okay, so on the ADA side of things, this is one of the ones which looks pretty decent on the BTC pair, unlike a lot of the altcoins. And I do think altcoin performance has been pretty sectoral, right? As we mentioned in Technical Roundup and all this other stuff, it's kind of DeFi season and less so alt season, because a lot of the alt BTC pairs are struggling. And I think that's where a lot of the divergence comes from. Like, some arguing the alt season is starting or it's on its way, and others just looking at them in disbelief, like, what the fuck are you talking about? Like, I've been in Aave, Sushi, Link, Dot, like, it is alt season, and it looks like people are almost speaking different languages. Meanwhile, the truth is, like, some uncomfortable middle point, whereby it's been alt season for some and not for others. Now, if you're being really pedantic about it, which I kind of like doing sometimes, but this is also, I think, a reasonable position, it depends on your definition of alt season, right? Like, if your definition of alt season is somewhat orthodox, conservative, canonical, whatever, I think it's a period of altcoins outperforming relative to Bitcoin and Ethereum indiscriminately for meaningful periods of time. So any fucking altcoin pair, all these shitcoins essentially moon, and it's a question of how hard is it going to moon and when is yours going to moon. Then you look at stuff like EOS, Tezos, and some of this shit which just, legit looks like that. And you can understand, while Aave, Sushi, etc. looks like that, you can kind of understand why person A and person B are disagreeing on the state of alt season, right? So it's kind of worth bearing in mind as well. That kind of divergence is important. So with regard to ADA, BTC, Cardano, obviously, it had a weekly breakout, which is cool, right? Haven't seen that in a while. And this is, again, one of those market structure setups. You've got lower highs and lower lows, etc. But most recently, you had a lower high relative to this one. you had a lower low relative to this one, but then you have a higher high. Great. So what you generally expect is that swing high area to act as your support, and it's kind of done that so far. I didn't really test it, but not too important. So against BTC, it looks okay. I still think, like we've seen similar rallies get retraced quite a lot, so it's kind of worth being careful. But that certainly warrants looking at the USD pair. The USD pair looks all right. I don't love this structure, and someone's going to call it the head and shoulders, but it really isn't. Oh, sorry. Yeah, the USD pair. USD pair looks all right. I mean, I'm kind of running out of price history here on the weekly time frame, or on this data feed as well. You could argue that it's like a fake out close thing on the weekly time frame. Let me see if there's any more data on this. Does Polo have it? Nope. Nope. I think I've got the biggest data feed for that. Binance, Trex. Yeah, Trex probably. Okay. Yeah. So I think on the USD pair, this kind of takes me to a point. The weekly swing points have been pretty good, for the most part in this instrument. Right? We take this cluster, flipped reasonably well. This flipped reasonably well. This hasn't yet. Okay, so that's pretty straight. That's something worth bearing in mind. I generally don't long into structures like this when you get a close above a level and then the next close is below it. If it gets back above it again, right, close above, close below, and then reclaims it, that tends to be a good long, because you very rarely get double fake outs. But this type of stuff, I'm not a huge fan of. I think that's 0.35s or thereabouts. And this is something I do with altcoins generally. Like, if a tool works really well, and then it stops working as well, I'll try to shift my focus to something which is trading a lot more cleanly. So in this case, the tool is the really straightforward horizontal levels. Worked really nicely, no questions, no fake outs, whatever. Worked really nicely, no questions, no fake outs, whatever. I mean, arguably this breakout as well, right? Whatever you want to call it. And then it comes into this level, and for the first time in, again, depending on how you draw this, like, I can understand, you can argue there's some stuff going on here. Whatever, I think generally the point is valid. This is kind of the first instance where the flip of the level hasn't been as clean, and I think that's worth paying attention to, right? So yeah, for this pair, I just think there are better opportunities. If it really wants to pull back and take a shit, there may be like a do or die risk reward punt closer to 155s, but I think the weekly close for me personally would keep me out of this for the time being. It looks okay on the daily, but that weekly close is something I probably wouldn't ignore if it were me. Dot. I think the dot chart is really nice. It was one of the ones that I've... Hi, Gel, how are you? It's one of the ones I added to my tweet, thesis, whatever. And again, this is one of those where what you want to do is identify a pattern or a mode of behavior which consistently works this instrument. A lot of the time for strongly trending instruments, it's these mini ranges or clusters that form during trending periods. Impulse, consolidate, impulse, consolidate, impulse, consolidate, etc. And you get these consolidations which act as nice support resistance structures. So it just means this thing can continue going up without offering that massive macro pullback, whatever. I think DOT speaks to that quite nicely. This cluster at 8 to 9 did its job, especially at the range low. We've got another one formed at 13 to 14. And from high, it actually narrowly missed on the last pullback. From high to low, that falls anywhere between kind of 25 to 30%, which is, again, DeFi tends to pull back and also rally way more than the big ones, but still, that's pretty reasonable. I think in the short term, it's reasonably likely, at least I'd certainly be keen on a retest of this area, simply because if we look at the most recent support resistance flip, that's certainly, I think, got some participants slightly less comfortable than they would like to be, for the basic reason that if we use the highest close as our kind of breakout level of resistance, right? You've got resistance, resistance, close above, and even retest, everything looks good, and then this current daily candle looks like a bit of a trap, or certainly far weaker than what you'd like to see if you're buying this breakout, because it spiked previous day's high, and it's now making new daily lows while still being below the level itself. So any of the breakout buyers above the levels are going to be feeling pressure as price. Well, they basically got faked out, right? That's sort of what it looks like, because you're buying the breakout, and then it goes below your entry and below the level whose flip you bought. You're not going to feel great about it. So for DOT, long story short, first area of interest for me, I hate that term, but that's kind of how I use it, is the cluster at 13 to 14. If it doesn't get there, then maybe this turns into a cluster and it goes higher. Then we'll have to trade it when it comes back. But generally, I am interested in trading these mid-impulse consolidation structures as support resistance. If it comes back to 13, 14, great. I mean, the closer to the low boundary, the better. But yeah, that's where my focus would be with DOT. I don't use the big figure for my fibs. I don't know what that means. The BTC pair, of course, looks really good. I think we actually spoke about it when this daily flip happened, and that move off of that was absolutely insane. So that's cool, I guess. And it looks like it's essentially run out of resistance on the BTC pair. And I'd expect, as long as that all-time high consolidation acts as support, outperformance is likely to continue. This is another thing you can sort of look at. If the USD instrument or the USD pairing of the altcoin you are looking at has literally run out of resistance on the USD pair, which is common, but you want to get some basis or understanding of resistance, I think the first thing is, of course, you use your round numbers, whatever, in the USD pair, so $3, $4, $5, $6, 0.1, 0.2, all that kind of stuff, which looks nice. The second point you can do is look at the BTC pair. Sometimes, yes, there's no BTC pair resistance either, which is crazy, but a lot of the time, you'll see the USD pair respond to big high time frame levels in the BTC pair as well. YFI is also a good example of that. So that's something to bear in mind as well. Link. So Link is okay. Something rubs me the wrong way about Link with regard to its all-time high price action at the moment. I mean, this is generally not the type of stuff I like to see in an instrument that's just broken all-time high and is just going to mega moon, right? If you want a case study in what a strong all-time high breakout looks like, literally just look at Bitcoin, right? That's your kind of quintessential example. Like, I know we're coming into a range low here, which I think is fine, around $22 or thereabouts. And generally with all-time high breaks, as long as the level itself doesn't get flipped back to resistance, it's fine. But as you know, I'm not a huge fan of candle closes that form way away from levels. So in this case, got to close through the level significantly, and then the next weekly, despite trading at the level, closed well above it as well. I think the daily's slightly better in that regard as well. But basically, the only thing that can get me on board Link is trading closer to the all-time high structure itself. Which is around $18, maybe even, this is really ambitious, below that breakout candle low. Because what you'll see a lot is when you get a chart that looks like this, the FOMO that gets ignited is absolutely mental, and a lot of participants will conveniently just expect this to double, fine, and then put a stop at pretty much the closest high time frame candle they can find, and this is generous. So anything that kind of comes closer to the all-time high level, as you can see from my other charts, I like to trade at structure, not away from structure. Anything here I think is worth a punt, and the good thing is your invalidation is any loss of support at the all-time high level or close around 18 or 19, because a strong market simply doesn't do that. So I think that, as you can see on my chart, the first real bounce zone I've got is 2021, which is this dump which then got engulfed. That could be a decent little bounce play, at least on lower time frames. But long story short is you've got a bunch of stuff, for lack of a better term, going on around the all-time high area. It closed in a way which I don't like, but I'm comfortable taking a punt at the all-time high retest itself, knowing that if for any reason this makes like a lower close, loses support, etc., that I would be getting the fuck out of this market and potentially even be selling the underside of it. That's what makes all-time high trading really good. Like, you either get crazy momentum north, which is cool, right? Breakout traders get rewarded. Much rarer, you get pullbacks to the level. that you can actually trade. I don't love when this happens, but you know, I'll act on it if the opportunity's there. But then also on the bearish side, if it breaks and then does come back below the all-time high level, you have a really risk-defined sell, and you know there'll be a lot of participants trapped on the wrong side of that because the all-time high break is a strong signal, right? And all of those strong signal takers would be trapped on the wrong side of the market. So long story short, doing business at all-time high is kind of how the only way I could really get on board Link, unless I want to punt some more ambitious structures close to market that lands at around 20 or thereabouts. You can just kind of see this area is important. I think a do or die bounce at that level is pretty reasonable, but if it fails and breaks market structure, makes a lower low, etc., I think that'd be a really good sell, with this being the overthrow portion, and then targeting something really bearish looking. How come you have a click mouse? DM me and I'll send you one. This is some old gaming mouse I've got. I'm sorry it's loud. And you can see again that point somewhat being the earlier point coming to fruition. The BTC pair leading in terms of resistance in the form of this old range low, support, support, support. The BTC pair comes into resistance, and then the USD pair starts to struggle and floats back to the origin of the breakout. So that kind of is a decent demonstration of the argument made earlier that when you have USD no resistance, or you want to get some extra confluence, whatever, looking at BTC pair resistance isn't the worst idea in the world. Right. Don't really think BNB is hugely interesting at the moment. I think we can apply a similar argument. Actually, this is slightly interesting. I was wrong. Haven't paid attention to it in a while. I think we can make literally a one-to-one analogy with BNB. The all-time high retest, is it the most bullish thing in the world that it even comes back and tests it? No. But, you know, it's there. It's technically support until proven otherwise. So anything that kind of comes into this area, if BNB is going to do well, should bounce. Accordingly, any weekly closes back below around, where is that? 38 or thereabouts. So basically all-time high breakout failure, making shit up at this point. So anything which fails to act as support here, at that point, these are the new breakout top buyers, and then they'll face some pressure as the market moves against them, probably at least back towards this breakout area close to 24. With a lot of these, if the charts look similar, the same logic can be applied. So if you've got an instrument that's broken all-time high and it's retesting the level, you essentially either do or die kind of punt the long side for continuation, and if that fails, you get the fuck out, because those new all-time high buyers are now kind of bag holders, at least in the short term, right? Gold is actually an example of that. Not the best one, but I suppose from a chart pattern point of view, if you kind of ignore timeframes, there's some truth to that idea, whereby you have like an all-time high level that's undoubtedly going to have a lot of eyes on it. You have the clean break above it, retests it and closes above, but again, the very fact that it came back and retested isn't something you want to see. Like Bitcoin just chatted through it and then doubled. That's what you want to see, right? This is kind of the most appropriate response for an all-time high break, and gold is giving a masterclass on the least appropriate response for an all-time high break, whereby breaks, fails, and then not only do you have support not found at the all-time high level, you actually find resistance at the all-time high level, which sucks, of course. YFI I actually find really interesting in the USD pair, simply because like the range is so nice on the daily time frame. You've got this highest close, which has been absolute pain in the ass and not the cleanest thing to trade in the world. You've got this lowest close. Again, it got reclaimed and traded quite nicely, but this took a damn while to get going. But we wrote about it in Technical Roundup. And then you've got this market structure level at the midpoint. So, I mean, technically, this is an absolute kind of treat in terms of its levels. So I think for anyone looking for trending plays, which I think is really the advantage of this DeFi stuff, is kind of trending plays as opposed to clean TA scalps, whatever. I think it needs to break above the range high at 35k on a daily close, which doesn't look like dog shit. Especially now, I think we can really focus in on the most recent swing high from a market structure point of view, right? Also, like the video if you've, I don't know, or don't. Doesn't really matter, doesn't change anything. So, if we take this swing high, look at it, you had an up move, right? Swing, you've got a high, lower low, right? So this low that came in is lower than the preceding swing. So if the market's bullish, you have lower low here into another lower high, which you'd expect to form somewhere here, right? So as before, our reversal is when you have a lower low into a, and again, I've got a full like hour-long video on market structure. Go watch it. On high into a higher high. This portion is when we get happy and start to look for reversals. And in this case, not only is that potentially available at this swing high at 37k, but the swing high itself lines up with the top of the range closer to whatever that is. So you've got confluence there, right? So accordingly, to get bullish YFI, I'm personally not a huge fan of, I mean, I think trading the mid-range is kind of okay wherever we had that level. I think it's a bit closer to, hold on, where is it? Here we are, that swing high there. Okay, so I think trading the mid-range is okay. It's permissible. I'm not like one of those who says, oh, only trade the extremes of the range, you don't do business in the mid-range. Especially if the mid-range is a nice level, I think it's fine to trade. But I think the better and easier trade will come from that type of market structure reversal if we get a higher high through the last swing at around 36, 37k, and then any sort of pullback into that level would be a gift for a trending move higher towards, again, USD price discovery. So either look at the BTC pair for resistance or start using round numbers like 40, 45, 50, etc., etc. I think that's kind of how I would approach it. Personally, I know this question comes up a lot when regard to range trading. I wouldn't be a fan of buying the range low again, simply because of how much time was spent there, right? When it was initially reclaimed, and this is being a generous form of counting, you've got 1 test, 2 test, 3, and then in brackets 4, right? I mean, are these different or is this one? It really depends, but I think the range low is really battered. And I think the fast-moving, nice trade will come from a market structure type of reclaim bullshit thing through this high. Anything in between, you know, you've got resistance up here, you've got support down here, and it's just been really underperforming relative to a lot of its peers. So it really needs to give me a reason to chase it, if you will, and I think that higher high would be a good reason. Aave, again, this is one of those you kind of really want to pay attention to because it just goes up a lot and it trends nicely and it doesn't really fake out all too much. It did kind of earlier on, we were monitoring it kind of in this area. Not all of the candle closes were particularly nice, but it's sort of cleaned up its act a lot. I think for a lot of these DeFi pairs, it's worth monitoring what kind of structures were formed when ETH dumped. Because a lot of them you can see, you know, ETH dumped and then they fully engulfed that move. That takes a lot of buying to do, right? So we want to pay attention to those levels. We had a similar one in Link. So for Aave, that's at around 185, 196 as the upper and lower boundaries thereabouts. That is kind of my support. Again, this dump should have been really bearish, got reclaimed or engulfed, so that should now be support. Any pullbacks into there are probably worth a kind of do or die punt bounce sort of play, with the next real high time frame or more established high time frame support being this consolidation closer to 127, 114. Now, I really like charts that look like this simply because look at the difference look at the space between levels, right? So if it doesn't bounce here, at least for my system or where I can trade, I have nothing until here. If we just take the most generous measurement of that from one level to the next, that's like a 30% sort of no trade zone, or potentially even swing short zone if things set up appropriately. That's really nice, because the way you have to realize a lot of people end up trading is that, let's say they buy here and then it goes down, then they buy here and then they average a bit more here, then they buy this support and then they buy the SFP of this low and then they buy like this high here, and it ends up being a total shit show. Right? I really like markets with space because I can trade with pretty clear parameters. That if it doesn't bounce here, I get the fuck out the way, it can do whatever it wants until it either reclaims this or reaches the next level. So if you suffer from that type of behavior in your trading, it's usually a symptom of simply not having well-defined boundaries for where you want to trade. So work on it. From high to low, a pullback into that structure. Again, just like with a lot of these, will be around 30% or thereabouts. If I get it, great. If I don't get it, I'll map something else if the market gives me structure. But I'm not going to chase it personally. BTC pair, no surprise, similar to DOT. You had this last big swing consolidation before the nuke as resistance, and now that's expected to be support. And it might actually end up being quite nice confluence on a pullback if we get it. And again, anyone starting to see a pattern yet, right? The market structure thing we talked about. You've got a high, which makes a lower low relative to this one, some resistance, and then a higher high, right? So that's, at that point, a high, which made a lower low, has failed to act as resistance. And so when that gets retested or reclaimed, that's your kind of market structure, reversal setup, yada, yada, yada. Uni, it's a very similar type of deal here, whereby a lot of these DeFi pairs, and again, if the chart looks the same, I think generally the similar type of logic is applicable. Also, look, I mean, $12, right? You saw a lot of profit taking come in between 12 and 13, didn't actually reach 13. 12 seemed to be the brunt of it, and currently pulling back. So in a similar vein, this is one of those which sold off when ETH sold off, and then got completely engulfed. So that makes for support here at around just under $8.5, $9. I could see there being kind of psychological round number support at 10 worth being aware of, which is also aligned with this swing high or breakout level there. But personally for me, I almost always, like virtually without exception, get burned when I trade away from my structure. So I'd rather not trade my structure at all. Like I either trade at structure or I pretty much don't trade at all. So for me, the nearest such area is around the $9 handle. If it gets there, great. I think that's good for a do or die punt with any invalidation likely taking price closer to 7, which is this old breakout level. But anything in between, probably not worth knife catching. And where the market is right now, for me, nothing I can kind of tell you either. Remember, for the most part, horizontal takes... What am I saying? For the most part, support takes form horizontally, not in a kind of upwards slanting kind of way. Even when you get impulse, consolidate, impulse, the actual support is formed in the horizontal portion of the move, not the diagonal portion of the move. If you're looking at a diagonal, like if you're looking for diagonal periods of price action as support, probably won't go terribly well in most cases. Sushi. This is really nice. Similar to... This is one of those ones which had kind of its listing level. Like Uni flipped this level into support and traded higher. Sushi found resistance there. And again, not going to spend too long on this. Same logic. The dump which happened got engulfed. So where that took place, which for Sushi is around $7, $6.5, $7, that's my support. If that fails, then larger breakdown towards... $5 or thereabouts. Okay? I think it's really important with a lot of these. If they break support, just get out of the way until the next one or until the market reclaims it. Especially with altcoins, which, you know, liquidity can vanish pretty quickly. Doing business in these far less defined middle of the road areas just isn't as reasonable, in my opinion. Oh, this... How did I miss this? So, do I even want to add... Yeah, I suppose SNX out of these is the ones that's closer to support. Oops. I'm just going to annotate this very quickly, kind of see if it does anything. So this got support at 15, and it's already tested support at 12. I think that's a decent enough level. How much has that pulled back from high to low? Yeah, 12, 13%. I mean, it's a bit on the shallow side, but support until proven otherwise, so to speak. I think for the most part, as long as this range holds with kind of range high cluster resistance at 13, and then the range low closer to 12, as long as this is intact, I think it's fine. But this is one of those where the space is really important. If that breaks below 11, there's a good chance that a lot of the breakout from this macro 7 level gets filled in. So that's not where this is the area where you set out. The kind of thinness of this move is where a lot of ugly and unfavorable price action is likely to form. So again, same logic. I think 15 is the nearest support. It's a bit on the shallow side, so maybe a wick lower is kind of worth being aware of. Generally, as long as the consolidation holds, trend is intact. Any loss of 12, I'd be getting the fuck out for it to fill in a lot of this. Funnily enough, we can kind of apply this TA to DeFi perp, where it nuked when DeFi nuked, and as a result of ETH going down, and then got engulfed, so we can pretty much use the same. I'm not a huge fan of using TA on indices per se, but it can kind of provide a decent understanding, at least in terms of the big stuff, like big levels and market structure, trend, etc., of how these things are going. So I'd pay attention to it. This is the FTX's index. I'd pay attention to it at 5.2, 5.5k. Yeah, TA doesn't work perfectly on these things, but we can just observe them and see, periods of downtrend, periods of reversal, consolidation, markup, like your really basic stuff still works. Now, I still think it needs to make sense what you're assessing in terms of trend, etc. Like looking at Bitcoin dominance, for example, at that point, the underlying index itself is shit, and it doesn't make sense to even analyze it. So at those points, TA is far less sensible. But you've got like an actual index that's liquid and a tradable product, and assuming it's well designed, which I think it is in FTX's case, while I wouldn't expect perfect reactions to every level, support, resistance, oh, these people are trapped, etc., we can certainly look at the big stuff to still get useful information out of it. Okay. Right, that's all I've got. We've gone on for an hour and a half, actually, so that's a long time. No time for requests this time around. Not that I'm a fan of requests anyway. To be honest, if you're someone who straight up just wants people to chart things for them, and I'm not, I've had a lot of experiences with paid groups. Most of them were bad, some were good. But if there's ever a valid reason for joining one, it's not to learn how to trade, but to actually get your own personal chartist. Like a lot of the guys in those types of groups just love charts and hate trading, and they will sit there and draw charts for you all day. So if you want that, that's the place for it. This isn't usually the best venue for it. But yeah, that's all I've got. Like the video if you haven't already. Subscribe to the channel and all that good stuff. You can replay any of it if it didn't make sense, and leave a comment which we monitor and read. Ooh, bounce. Yeah, thank you, of course, to Bybit for sponsoring the show, supporting the live stream. I would strongly recommend, it gets better every week, that you go and subscribe to Technical Roundup, which is our weekly newsletter with the Duck. It's just good. I'm not exaggerating or marketing when I'd say I'd be much better off, much wealthier, and probably a better trader if I traded our newsletter ideas exclusively without any of my own shit. It's just very good. So I wouldn't say that if it weren't true. So be sure to check it out. It's also free, right? It doesn't cost you anything. We change it up every week, blah, blah, blah. Technical Roundup is actually just a good newsletter. There's no fluff, no bullshit. We email you once a week and it doesn't cost you anything. So go check that out. That comes out tomorrow at 8 p.m. UTC. That's all I've got for now. Hope you learned something. If you didn't, as usual, it's my fault, and I will see you probably on Friday. Take care. Hope you had a nice weekend. Trade reasonably, and I appreciate your company.